Yeah, there's a lot going on right now. It's obviously exciting to see. I think first and foremost is, you mentioned obviously the Terra collapse of a couple of years ago, and really how we haven't seen these prices since pre-Terra. But I think, really to go back in time a little bit here, what's been driving the price downward, and what we've seen in terms of a lot of the overall selling pressure over the last year or so, and really what drove the Terra collapse has been obviously a lot of hawkish policy from the Fed. I think over the last several months, it's become very, very clear that monetary policy has probably reached a point of tapering. We're going to start to see potentially rate reductions and a couple excuse me, a couple rate reductions next year, with CPI and core inflation actually really cooling off in a positive way. In tandem with that, obviously, you can look at the price of gold in the last couple of days here. We have increasing global pressures around the world, increased macroeconomic strains, and in tandem with some of the shift in monetary policy, a lot of institutional investors and sovereign states are looking towards more safe haven and deflationary assets in terms of overall portfolio allocation and broader diversification. The last point as well is obviously a lot of the broader sentiment that's really kind of ramped up with regards to some of the ETF applications and potentially regulatory softening that will pave the way for those applications to really be pushed through. And to make it clear, spot ETFs, not necessarily the traditional futures-based ETFs that we've seen historically.